Hello and welcome back to Explain the Charts. Today we're tackling Google stock, and we'll be analyzing both the current market news and the candlestick charts to give you an in-depth perspective for your trading decisions. Recent news has been mixed. JP Morgan recently cut Google's stock rating due to concerns over potential antitrust penalties, but other analysts remain bullish on Google's prospects for 2025, citing its solid performance in 2024. This conflicting news creates an interesting backdrop for our technical analysis. Let's start by looking at the daily chart. We can clearly see an upward trend in GOOGL's price over the past few months. This trend is supported by strong buying volume. However, we also see periods of consolidation and minor corrections. Notice the recent price drop. This could be attributed to the negative news about potential antitrust penalties, which caused some investors to sell off their shares. But it also presents a potential buying opportunity for those who believe Google will continue to grow. Now, let's zoom into the 1-hour chart. Here, we can see more details of the price action and spot potential support and resistance levels. Over the last few trading sessions, Google is showing increasing strength. However, the volatility is apparent on this chart. The 15-minute chart offers even greater detail, allowing us to identify short-term trends and potential entry and exit points. We can see this volatility even more pronounced here. Look at the wicks. This shows some indecision. Based on the combination of news and chart data, we can identify key price levels that traders should watch. We can see some resistance around the 195 level and support around 185 on the daily chart. On the hour chart, we have even more levels for potential entry and exit points. There is also significant support at the 175 range on the daily chart and 165 on the hour chart. These levels represent a critical point for the short term. If they break, the uptrend would be in serious danger. In the short term, the price action is quite volatile. A move above 195 would confirm the continuation of the uptrend, whereas a drop below 185 could lead to a significant correction. The short-term strategy depends greatly on risk tolerance and what time frame you're working with. For the long term, the outlook is cautiously bullish. However, the potential antitrust penalties remain a risk. If the stock price manages to stay above the 185 level of support, the uptrend would continue to have a high probability. In summary, several key price levels should be monitored. The 195 level represents short-term resistance, and a breach would likely indicate further price appreciation. However, a fall below 185 could signal a more extensive correction. In the long term, overcoming the 185 support suggests a continuation of the upward trend. Be aware that the volatility is there, and make sure your risk tolerance is accounted for. Keep your eyes on the news and the charts to adapt your trading strategy.